When banks, credit unions, businesses, and various other payers file information returns with discrepancies that do not align with IRS records, a series of notices are issued by the Internal Revenue Service. These notices, known as CP2100 and CP2100A, serve as an alert to payers, highlighting issues such as missing or incorrect Taxpayer Identification Numbers, TINs, names, or other relevant details on the information returns they have submitted. Today I'm going to explain the key aspects of these notices, the implications they carry for both payers and payees, and the forms that are most commonly associated with errors. CP2100 and CP2100A notices are integral components of the IRS's efforts to maintain the integrity of the tax system. They are distributed by the IRS twice a year, in September and October, and then again in April. These notices play a crucial role in addressing discrepancies and ensuring that information returns are accurate and compliant. The IRS predominantly sends CP2100 and CP2100A notices for discrepancies identified on specific forms. These forms represent a wide range of financial transactions and payments. The most common information returns that may contain incorrect information include Form 1099-B, proceeds from broker and barter exchange transactions. Form 1099-DIV, dividends and distributions. Form 1099-G, certain government payments. Form 1099-INT, interest income. Form 1099-K, payment card and third-party network transactions. Form 1099-MISC, miscellaneous information. Form 1099-NEC, non-employee compensation. Form 1099-OID, original issue discount. Form 1099-PATR, taxable distributions received from cooperatives. And Form W2G, certain gambling winnings. These forms encompass a wide spectrum of financial dealings, from stock transactions to gambling winnings, and are instrumental in the IRS's assessment of an individual's or entity's tax liability. A critical aspect of the CP2100 and CP2100A notices is the issue of backup withholding. Payers are notified that they may be required to initiate backup withholding on tax payments. This is especially relevant when the payee has failed to provide their TIN to the payer in the prescribed manner or has not certified that they are not subject to backup withholding for underreported interest and dividends. If the IRS communicates to the payer that the payee has provided an incorrect TIN or has not complied with the necessary certification, the payer is mandated to initiate backup withholding. This measure becomes necessary to guarantee the payee reports all of their interest and dividends on their tax return. Payers bear the responsibility for any amount they fail to backup withhold, in addition to the penalties that may be applicable. These penalties are a crucial part of the IRS's enforcement mechanism to ensure that payers take their due diligence seriously and adhere to the tax regulations accurately. The issuance of CP2100 and CP2100A notices by the IRS underscores the importance of accuracy and compliance in financial transactions. Payers and payees alike must work in unison to rectify discrepancies, update records, and ensure that all relevant tax information is accurately reported. Understanding the implications of these notices is vital for all parties involved, as they play a pivotal role in maintaining the integrity of the tax system and ensuring that taxes are paid correctly and in a timely manner. Payers may receive notices CP2100 and CP2100A if they filed an information return with errors. If you have received one of these notices, first, check what you reported against the original W-9 form received. If a number was transposed, correct your records and no additional processes are necessary. If the information you submitted matches, ask the payee to verify the info they provided is correct. If they made a mistake, have them provide an updated W-9 form and no further action is required. If the info does match and the payee says it is correct, you must initiate backup withholding. The payee may want to contact the IRS to determine the reason for the mismatch, but it is imperative that until that is resolved, that you begin backup withholding and forwarding funds to the IRS as required. If you have any additional questions, be sure to ask your CPA for assistance in this matter.